Is the budget in line with your expectations?
Yeah, the budget, we are always telling that this is a vote on account. And if you look at finance minister and other government agencies also earlier indicated that this is not a full-fledged budget, so do not expect much. Unfortunately, from the market, there was a huge expectation. So that's why I think there has been some kind of disappointment, especially from the equity market. But having said that, government had given enough clue that this budget is going to be an interim budget or a vote on account more precisely. And in that sense, we are not expecting much from the budget, and so more or less our expectations are met by the budget. But I think from the broad market perspective, there were a lot more expectation from the budget.
What were your expectations from this budget that the government didn't focus on?
Actually, as I said, I didn't have too much of expectation from this budget in the sense in vote on account. You don't do much on the expenditure side, any major change in the expenditure side. You basically carry on the projects, and you don't propose any new taxes. You don't cut any new taxes. But sometimes in the interim budget, government has proposed projects. For example, in 2019 government had done the Kisan Samman Nidhi, government had taken steps for MSME, government had done tinkered with the standard deduction. So that perhaps had set the expectation that this time also government is going to do the same thing from the interim budget. So far as our expectations are concerned, there hasn't been any disappointment. We expected the budget to be focused toward investment, which it has. We expected the budget to walk the path of fiscal consolidation, which it has. In fact, it has worked more than what we are expecting on fiscal consolidation. So from that perspective, we are rather positively surprised by the budget rather than some of our expectation not being met by the budget.
Can you give us any three highlighting features which you think need special mention?
First and foremost, I think the budget numbers itself is the highlight. The fiscal deficit for the current financial year ending March 2024, which was at 5.9% of GDP, which has been now scaled down to 5.8%. And more importantly, for the target for the next year has been put at 5.1%, which is significantly better than what we are expecting. We are expecting somewhere close to 5.4, 5.5. So that's one of the biggest highlight. Second thing is that government is walking the path of maintaining strong public capex. If you look at the outlay has been increased 11% from the budget estimate of FY24. In fact, if you look at the actual number for FY24 may be lower than that. So in that sense, from a revised estimate, the rise will be significantly better. But this one single-minded focus on public investment, this is something which is very, very positive. And now almost 22% of the government total expenditure is going towards capital expenditure, which is almost 10 percentage point higher in the last 10 years. So this is a very big positive. And the third thing, I think that government has proposed a long-term 1 trillion rupees 1 trillion fund for research and development at low cost or low interest rate or even zero interest rate. We think this is a game-changing thing. And if this can actually help innovation in India and make India ready for becoming the developed country by 2047, which has been the target for the government. So I think these are the three key points. That is the fiscal prudence number, that is the focus on investment, and the innovation fund. These are the three major takeaways from the budget.
Overall, how would you rate the budget on a scale of 1 to 5?
See, as I said that since this is a vote on account, it's a budget as usual kind of a thing. So there is not much point in rating it. But having said that, for the three numbers which I just mentioned, so it's very close to 5 on 5 kind of a budget for me, because my expectation was not very high. From a market perspective, the rating may be slightly lower because there was huge expectation. But I think what the equity investors particularly should realize that with this fiscal discipline and also the inclusion of Indian bond in the bond fund index, the bond yields are going to come down significantly. And since the bond yields are used at the discounting rate for equity valuation, This is a very, very big positive for the equity market, and this should be a harbinger to India becoming the best performing country in terms of equity return in 2024 as well. In 23 we have been, and in 24 also, if the risk free rate comes down. So from that perspective also, for equity investors also, this budget proposes a very some framework which is very positive for Indian equity. So I think it's a very good budget in that sense.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.